Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming Fed meeting and the outlook for the dollar. So Marios, the Fed will announce its policy decision tomorrow afternoon. At its last three meetings, it cut rates to protect the U.S. economy from a deteriorating global economy and trade war repercussions. But at the moment, the broader economy is still solid. So what action is the Fed likely to take, and what might that mean for the dollar?
Well, most likely they're not going to take any action this time. So if you listen to recent comments from the various Fed officials, it's been a pretty consistent message. We've cut rates 3 times. We are pretty happy about where policy is right now, and for us to act again over the coming months, it will probably take a major shock to the economy or a clear deterioration in the economic data. So they are not going to act this time. Most of the market reaction, therefore, will probably depend on what kind of signals they send about future rate cuts. So specifically, will the new dot plot signal one more rate cut for 2020, or will it signal no rate cuts? I'm in the camp that thinks it's going to signal no rate cuts. And the argument is the US economy, as you very correctly pointed out, is still pretty solid. Sure, manufacturing has taken a hit, investment has also taken a hit, but the rest of the economy is still doing fine. The consumer is strong, real wages are growing, and the labor market is pretty tight overall. Now, on the foreign front, on the global front rather, the truce in the trade war has also held. And who knows, if we finally do get that phase 1 trade deal, the situation might de-escalate a little further. Now finally, the previous rate cuts that the Fed did in the past months, they still haven't filtered their way into the real economy. Monetary policy works with a lag of about 6 to 9 months. So those have still to boost economic activity. So combining all of these three, I don't see a real argument for the Fed to signal more rate cuts right now. Now here's the interesting part. The markets are still pricing in a full rate cut by November next year, which means that if we do get a dot plot that shows no rate cuts for the coming year, that would probably lead market participants to price out some of those rate cut expectations, and that could therefore boost the dollar a little.
I see. So given all this, what's the broader outlook for the U.S. currency?
Well, at the risk of beating a dead horse here, we've said this many times, I would say that it's still positive. So the US economy is still much better, much healthier, let's say, than its other major counterparts. So let's compare it to the euro area. The growth in the euro area is struggling. Who knows, the bloc might be facing the threat of a recession next year. And unless national governments in the Eurozone get together and organize a fiscal stimulus package to kickstart growth, it's very difficult to see a real turnaround in the euro. Therefore, I would say the broader outlook for the dollar is still favorable, mainly due to a lack of real alternatives.
Marios, thanks so much for joining me, and thanks for watching at xm.com.